Welcome back, guys. Let's, as promised, take it straight to Vinod Sharma of HDFC Securities, who's going to give us some F&O cues and tell us what we should be buying and selling. Vinod, good morning. Thanks for being with us. What are the stocks on your radar today, and how are you approaching the markets in general?
Yeah, good morning, Sonia. We are approaching the markets with a bullish stance. It is now a buy at dips market, and some of the stocks can be bought outright, and some will have to be bought at lower levels. But we see the Nifty is very good on the weekly charts, although they may have fallen on Wednesday. Today, today we'll have to watch the 12,073 level, at which happens to be Friday's low. So I think that will be level to watch for. Otherwise, we see a bullish stance.
Okay, Vinod, good morning.
Good morning, Anuj.
Then what are the stocks on your list?
Yes. Anuj, I have, for a change, I have a cash market stock, essentially because there are no pure AMC stocks which are in the derivative list, although there are two stocks which are fully eligible according to the guidelines which have been given for many months. But nevertheless, we'll look at Nippon Asset Management Company. This is a positional trade. It closed at 379. I'm asking to put a stop loss at 356. For a day trader, that is very far off. For a positional trade, that needs to be that level has to be 356 with a target of around 415. This is in a fresh uptrend, and I think one could really make some good profits here, and good for the retail investor also, because the smaller stocks can be bought as against derivatives. The second stock which I am buying at the current level is Hindustan Unilever. That is a stock in which we have seen open interest being built almost to the extent of 14% in the current series. Was stock up 5% also in the series, although on Friday it didn't do much. It was stayed at the same levels. So I'm buying the 2180 call here for around 33 rupees, stop loss at 20, target of around 60. And there are two other stocks. One is Axis Bank, which I'm slightly buying at a slightly lower levels, and this I'm buying at 750 call. I'm buying at 12 rupees. On Friday it closed at 15, at around 14.5. So traders can take their call whether to wait for those dips, the level at which I'm suggesting, or buy whenever you feel like. But do keep a stop loss of 7, target of around 24. And yes, and United Spirits, Sonia, is my last bet. I'm buying the 680 call at around 16 rupees. It had closed at around 18, and I'm keeping a stop loss at 10 with a target of around 30.
Okay, in fact, United Spirits seems to be a bit of a consensus buy for today. Vinod, thanks a lot for giving us all those trading ideas. Let's get back to Prakash Diwan. Prakash, I wanted your thoughts on a couple of stocks. One is Voltas, where at least the AC division did quite well. The disappointment was because of the E&P business. And Inox Leisure, it came out with numbers on Friday during market hours. In the last 30 minutes, they look quite good. Your thoughts on that?
Yeah, so in fact, I was quite surprised we didn't get to discuss Inox, the kind of move that it's shown. So, and then it's giving you that deja vu feeling of deja vu, where, you know, what Jio and Bharti did in the telecom side. Why can't an Inox do to PVR? You know what I'm saying? There's too much of a differential in valuation between PVR and Inox. Inox, while it's the second largest player in the segment, which doesn't have too many players, especially in the listed space, you would only have to grapple with these two. What people probably, you know, are getting a bit worried is whether this is a flash in the pan kind of an, you know, event where, you know, these numbers could be sustainable. But remember, we are talking about the economy finally spurring tier 2, tier 3, effect, which is where Inox has got a much significant presence as well. So there could be some efficiencies that would continue to see this trend get much more solid. But these numbers definitely will warrant attention, even if while it came in market hours, I think there's still lots to go. The stock's done about 40% this year, but I think given what PVR has shown you, this could be much more significant from here on also.
And Voltas?
Voltas, I think Voltas is now getting to be that JV that they set up, that the whole Beko brand which they are now banking on, will have to do much more for people to get that confidence. Great stock. I think Blue Star, Voltas, all of these are in a very solid position. All the troughing out has happened. So I don't see any worrisome issues with that. But the numbers on a quarter-on-quarter basis is not fair to kind of this, because the trends are much more longer. What capex they've incurred, what efforts they're putting in is much more long-term in nature. And that, one announcement that the finance minister made on the budget day was the setup of a cold value chain on the railway sector. Now that's the first of its kind. Once that happens, the likes of Blue Star and Voltas and all will also get to participate much more in that space as compared to what they are. Right now, it's only passenger coaches that we are talking about where there is some presence. But if you're talking about that taking off, it's a new area for growth for the railways, which could be anyways on a PPP basis. So it's not even unthinkable that it could happen.
Okay, well, the pre-opening rates are kicking in right now. So the first rates are in the green. The Nifty is up almost about 0.3%. The dollar rupee is also opened slightly on the appreciating side. So 71.35 compared to a close of 71.40 that we saw on Friday. And a couple of rates to look at. M&M is actually in focus post its numbers, where you had good numbers coming in on the tractor and the auto side in terms of margin. So that stock is in the green. UPL numbers were good, 4% higher on UPL now in pre-opening. And on the downside, Tata Steel is down about 2.5%. So keep an eye out on that. We'll wait by for these rates to settle. And in the meantime, Manisha Gupta, commodities editor, is here with us. She's been waiting by patiently. So let's go straight to her. Manisha, good morning. What's the action in the commodity market?
Well, a couple of things to watch out for, Sonia, in the international markets. One is the US non-farm payroll data at 225,000. Markets were anticipating 160,000. So we have a much better number in that sense for the month of Jan. And that has been the reason that you haven't seen a further decline come in for many of these commodity prices. For crude, we have put in a 5 weeks of decline. Now, every week in 2020 actually has been a week year. But Russia also saying that they are still contemplating whether they want to be part of a further output cut for this quarter or not, really led to speculators coming in back in yet again with short sides being created here. We did see Brent prices decline by 6% in the previous week. We are trading quite flat right now. The markets also will be reacting to the Chinese inflation numbers. And apart from that, it also has to do with the strength in US dollar. The dollar index is trading at around 4-month highs. We've actually seen dollar gain up as a safe haven currency, the choice being made by the investors there. So whether it's high-yielding currencies, commodity currencies, Asian currencies, we've seen the dollar index continue to hold quite strong, and that in addition seems to be weighing on to many of these metal prices. The previous week was a better one, and the markets do believe that the Chinese stimulus measures will continue to support economy and the liquidity, and the metals would be taking a sentimental impact from that. And the fact also that much of the transportation is still shut, as is the case with businesses, construction and ports, and the supply situation also seems to be getting a bit of a question mark, a concern, and that is supporting the metal prices. But the demand is still on the weaker side. The expectation that the first quarter pretty much would be written off when it comes to China with the kind of numbers that we're looking at, that seems to be putting some adding pressure into the ferrous metals. Non-ferrous in the meanwhile have seen some value buying today.
Okay, Manisha, thanks a lot for that take. By the way, this the pre-opening rates. Tata Steel is down about 3%. That's reacting to its numbers, of course. Yes Bank, for some reasons, is up 10%. UPL is up about 4%. Britannia is up about 2% thereabouts. So we'll see how some of these rates pan out. There are a couple of other names in the broader market that you'll keep an eye on. GNFC is up 10%. Graphite India is up 5%. Adani Green up about 5%. So these are a few names doing well.
Okay, on the downside, you have MGL, where the performance was weak. So, MGL is under a bit of pressure. Oberoi Realty also on a quarter-on-quarter basis, the bookings were down about 17%. Repco Home is under pressure because the loan book and the disbursement growth was on the weaker side. That stock is down 1.5%. And let's take a look at SL Propack, because although the margins have improved for the company this time around, the revenue growth was not much to write home about, but margin improvement is what the street likes. So the stock is up almost about 2%.
Okay, I just want to tell you a word on Yes Bank. There was a social gathering of bankers on Friday evening, and the one word doing the rounds, and each one is confirming the same buzz which they have picked from someone else, there is one name that is being mentioned as a buyer for Yes Bank. See, I don't want to mention it because there have been too many false starts, but there are apparently 3 names and one fund's name was mentioned, and Anshu Jain has cracked it and stuff like that. But I'm not going ahead with it because let's wait for confirmation. My sense is that's what's keeping Yes Bank well traded today.
Okay. Well, the other stock to discuss is India Cements, because the company missed the top line estimates as volumes are likely to have contracted while the margins were under pressure because of flat realizations and lower volumes. So we have the man at the helm, N. Srinivasan, the Vice Chairman and Managing Director of India Cements, who joins us on the line. Mr. Srinivasan, good morning. What was the volume picture in Q3 versus a year ago? And more importantly, if you can, just tell our viewers, what is the outlook for Q4? Do you see a pickup?
As far as the volume is concerned, 1 year ago, year on year, I mean, we were at 29 something lakh ton, 29.6 lakh tons. This year it is 26.6 or 8 lakh tons. See, the cement industry was running along, humming along very nicely until the elections in the April, May, June. Then after the elections, somehow the economy, the demand seemed to stumble, and a lot of projects were cancelled in Andhra, Telangana, which made a very big impact because until then Andhra and Telangana were running at, the demand we were taking 32 lakh tons per month. It came down immediately post the election to about 14 lakh tons. We have 4 factories in Andhra, Telangana. Even the second quarter, we did not do so, it was not so great compared to our first quarter. In the third quarter, we were hit. So we had a choice. So prices were sliding down. So either, okay, you chase this price and sell more volume at a lower price, or wait and sell at a better price. So after a great deal of introspection, we decided to wait and sell it at a better price. As a result of which, we have now seen that the demand has improved. Demand in January is better than demand in December, and February is fine. So I think we are seeing a recovery of the drop in demand that took place in July-August period. I will recover the volume during this period, and going forward, I think the volume will not be such a. I went down to 69% capacity utilization. I will bounce back this quarter itself. I will go to 80% plus. So therefore, I'm not so much worried about what I think. In retrospect, our decision not to chase volume at a low price was right. Because now all prices have gone up. Prices have gone up in Tamil Nadu, Kerala by about 30-35 rupees, in Karnataka by about 35 plus, Maharashtra by about 35 to 40. In Andhra, Telangana, the price have gone up by 60-70 rupees a bag or even more. So therefore, there has been a smart price recovery, and demand is also there.
So in that case, Mr. Srinivasan, what were the realizations in Q3? Also, can you give us some expectations for Q4 for both your company and for the industry?
If I take the even end of January realization for me, and to now, I think at least 450 rupees it has gone up. And I believe it is still climbing because, the full price have not been recovered and realized in all markets. So as the full price is realized, it will. So I expect another 100, 200 rupees to come. And then further, you see, according to me, there is insufficient price increase in Tamil Nadu, which will get corrected, I think. There is possibly in Maharashtra prices will, and in Karnataka, you will see better prices. And definitely if the demand goes as it is now, you will see better price in increased price in Andhra, Telangana in starting March. I've gone up now, it is still climbing. It all depends upon, see, this is the demand See, a price can increase only when the demand is there. When the demand is getting stronger, prices can firm up. So I believe that period is there now where the demand is decent. Therefore, the price increase will stay and will improve.
Okay, Mr. Srinivasan, just stay with us. I'll just need to address the pre-opening rates and we'll come back to you. For now, the Nifty has settled 4 points higher, 12,102. The levels to watch, remember, 12,154 was the high on Friday and 12,116 is the 20-day moving average. So let's see if that's going to be a bit of a resistance area. On the Bank Nifty, we're opening 46 points higher. So let's see how things open. Ashwani, if we open here, is there a trade on the index and what's the 9-10 call?
The open is an extremely narrow open, and often markets tend to be range bound when they are opening with such a narrow gap between previous session close and today's open. So I don't think much on the index, but given the narrowness of the range, I would look to buy breakout above 12,150 and sell breakdown below 12,050. As far as stock call is concerned, Ashok Leyland is a buy with a stop of 80 and look for targets about 89.
Okay, and Sudarshan, your thoughts, your 9-10 call?
Well, I would avoid the index and sell if there is a small rally with a proper stop. Buy Coal India with a stop at 183 and a target of 194.
Okay, and Mitesh, what's your big call at 9-10?
I will pick a buy on Biocon with a stop below 300 for targets of around 330.
All right, gentlemen, thanks a lot for that. Let's resume our conversation with Mr. Srinivasan before the markets open. Mr. Srinivasan, thank you for your patience. Can you quickly tell us what were the fuel and power cost trends in Q3? And more importantly, do you see any pressure on that front in Q4?
One of the ways by which we came through the, we combated, mitigated the effect of this lower volume and lower price was by really tightening. I mean, we did very well in cost. We had cost has two components. One is the cost of the fuel itself, and then the consumption. So on both counts, we have improved, and according to me, it should sustain.
Okay. It's actually running out of time, but this is an important question. You know, about 20% of your shares are pledged. Any plans to reduce the pledges?
This is coming down. Earlier, when 1 year, 1.5 years ago, about 4 crore shares were pledged. Now, hardly 2 crores have been pledged, which represents only about 8% of the total company. And it is going down. And this also, it is not, this pledge is along with, the only thing we have not taken the trouble to take it out in the sense that other buildings and other brick and mortar is pledged along with it. So this is a kind of a top-up, as not necessary, and is going down. And the total amount of debt would be hardly 100 crores. So it's insignificant.
Okay, although it is insignificant, how much do you plan to reduce your debt by, and what kind of timeline are you looking at?
That is the theme for the 60,000, 70,000 level borrower mark. For us, my term debt started this year. I started with 2,700 crores. It is now down to 2,500, and by another 132 crores it will be as per the scheduled repayment. So this year I would have repaid about 330 crores rupees. Next year I'm scheduled to pay 500, which I will. Total debt this year will come down to 2,300. Which will go down to 1,800 next year. I mean, it is hardly anything, The advantage is I have got this debt at with sufficient long-term funding, so I can pay it slowly over a period of time. We are very casual about it.
Okay, all right. Casual about it. That about reassures everyone. Thank you very much, Mr. Srinivasan, for joining us with those thoughts. Time for us to turn to the markets yet again. That's the India Cement stock. Not terribly impressed, but I mean, they are hoping, the company is hoping for better utilization, and they are seeing prices go up. But that's largely in the price, one would think. We know about the cement prices increases. The market is having a green start. a little different from what the SGX Nifty and the Asian opening had prepared us for. But let's see if we can hold on to that. UPL is starting higher for now, but again, we'll have to see if that can be held. It was a good set, but then it's an inorganic growth as well. It's starting about 5% higher.